is Bitcoin, is eating value around the world, whether it's cash, stocks, bonds, commodities. It's all going to end up in Bitcoin. And that's the big trend, that's just been true since day one, and it'll be true for the next 10 years.
Trying to create a bank, and my goal was to create a full reserve bank. I identified 3 problems with traditional finance. One is when you deposit your money at a bank, the bank becomes the legal owner. The second is once they become the legal owner, they can spend it and direct the flow of funds. And the third is that they increase the money supply every time they issue a loan, and therefore the supply of money and digital currency was invented by banks as a debt. And so I tried to create the opposite. I wanted to create a bank before Bitcoin was around, where people could own their own money, people could spend their own money, and they could hold it on trust, and money wasn't created every time we issue a loan. They were actually just loaning out real money. It wasn't until Bitcoin was created and we went over to the Bitcoin conference 2011 that I realized these bunch of geeks and cypherpunks were actually creating it. And so rather than trying to create a bank, we had just been rejected by the UK regulator, stating that I needed to step down as CEO and we needed to hire a real CEO that had actually banking experience. I was also told that I need to deposit £60 million pounds at the Bank of England just to get started and to have the conversation. There was no concept of a challenger bank at the time. And then I was also told that you have to create money. Once you get a banking license, you have to engage in fractional reserve and you have to hold the funds at a traditional bank that is creating the money every time they issue a loan. So it was impossible just to do what seemed like was right. We were just very disappointed. And so we found ourselves at the Bitcoin 2011 conference and realized all we needed to do was support the industry. So we pivoted Bank to the Future from trying to create a bank to becoming an online investment platform and fund many of the companies. Max and myself, and we started investing in some of the companies. And they created all of the infrastructure, and then the industry just became bigger and bigger and bigger. And now we finally have the ability for you to own your own money, to spend your own money. And we have a fixed supply, so we don't need to worry about what's happening in the traditional system. All they need to do is carry on doing what they're doing. We can carry on doing what we're doing, and more people are finding that the demand for money you can own, money you can spend, the money that has a fixed supply is increasing for individuals, companies. And
over to Bitcoin 2022, and Jack Mallers is talking about being able to go into the store and use Bitcoin as a medium of exchange using the Lightning Network to use what the daily just cut with NCR, National Cash Register. So there's kind of a full circle here, that I've being in this for 11 years now. I'm observing how this has all come back. Lightning was what solved the problem that wasn't available back in 2011, and but that was kind of interesting. So as far as the feeling back in 2011 was very much that this was coming out of the cypherpunk movement, and it attracted both the freedom movement, the privacy movement and the encryption movement, and the Phil Zimmerman type cypherpunks that were looking for security and privacy. And it also attracted, we have lived in this industry for years now with what we popularly call grifters. This industry, like all financial industries, attracts grifters, and I saw it at Bitcoin 2022. You have a lot of people showing up saying, "I love Bitcoin," and then when you get talking to them, they're pushing a shitcoin, right? So I would say at least 20-25% of people there were fake Bitcoiners, which is fine, because that's just the way things are. But that's something that we've always had as well. We've always had this element of scams, because all financial markets attract scams. And but I think that to wrap it up here, I think that what what I call the Michael Saylor era, which started about 2 years ago, was really a step up. It was really the beginning of Bitcoin as a serious professional industry, I would say.
But the reality is that every central bank around the world now can see that if you do not bow down to the conventional thinking, and countries don't necessarily agree with each other on what conventional thinking is, then you can have your reserves sanctioned and confiscated. So China sat on $4.5 trillion of treasuries. Those could be deleted, or China could say, we're not going to roll over the American debt anymore. And so the Bitcoin strategy for countries and for central banks is really just a no-brainer. It's completely irresponsible financial management not to put a percentage of your sovereign wealth fund into Bitcoin, unless, of course, you are one of the dominant currencies that has the most power in the world, which is obviously the dollar at the moment. And so it's like a reversal where you have the countries that have been shafted the most, like countries in Latin America that have been historically plagued by economic hitmen using IMF loans, that now can say, well, we use the dollar, we hyperinflated away our currency. The dollar seems to be a medium exchange we can use, but it's being inflated. So let's also make Bitcoin legal tender. No-brainer move. And now people can save in Bitcoin and they can spend in dollars. Then let's restructure our securities market. Let's create securities laws just for this. Structure a bond, and we can have a bond that actually, rather than borrowing from and bowing down to Washington, D.C. through an IMF loan, or bowing down to Shanghai and Beijing through a China Belt and Road loan, we can actually construct a bond based upon a sovereign currency and fixed supply and digital hard sound money. I think that's a no-brainer. I think Sri Lanka should be looking at that right now. They're going to take an IMF loan. I think Argentina should be looking at that right now. But I think it takes those small countries showing and paving the way, and then you have it like as a reversal. And the very last one that will purchase Bitcoin would be the Fed. And so, it's kind of a very fascinating game theory that I see as inevitable, predictable, and guaranteed.
Yeah, good question. So, well, Simon and I, going back to 2013, we started Bitcoin Capital 1, 2, and 3, which was really the first VC fund in Bitcoin. And at that time, the focus was on exchanges. My background is really with exchanges. Simon had launched a platform which was able to kind of prove proof of concept, if you will. And so we ended up buying into Kraken at the seed round, and Bitso, and Bitfinex, and the exchange business is really one. There's only two businesses that have come out of this industry, and that's the exchange business and the mining industry. And so the exchanges have done really well. And so now in 2022 with El Zonte Capital, it's really focusing on hyper Bitcoinization. So anything that takes us closer to creating a circular economy, like we saw in El Zonte, in El Salvador, the people there are getting toward living on a Bitcoin standard, where they're paid in Bitcoin, they're spending Bitcoin, they're saving in Bitcoin, and they're completely divorced from the IMF and the World Bank and all the colonial interests that come from up north in the U.S. And other countries in the region are quickly figuring out that this is a fantastic thing. And so with the fund, anything that, we're looking at startups, early stage companies that are going to be pushing the hyper Bitcoinization mantra forward. Certainly, you would definitely need more education. So anything in ed tech is education technology would definitely be looking at it. But I'm also discovering, on the ground what's happening. We're in El Salvador quite often, and so we're just out there actually, kicking the tires, talking to people, and finding out on the ground, what people are doing, and just finding out where the momentum and the energy is, and going that way. One company that we're already involved with would be Jan3, which is Samson Mo's new company. He left Blockstream and he's starting a company in El Salvador. It's called Jan3, and he's all about spreading Bitcoin as sovereign legal tender to different countries and all the infrastructure that goes with that. So that's already pretty much earmarked to be in the fund. So that's where we're at.
Biggest winners. So, with Bitcoin Capital, it was actually one of the highest performing venture capital funds out there. It completely outperformed any traditional venture capital and a third of it was invested in Bitcoin mining. It paid dividends every single day in Bitcoin. We paid out thousands of Bitcoins in dividends. And it was also investing in companies like Bitstamp, which exited, Coinbase, which later IPO'd, and Kraken and Bitfinex and many other infrastructure and exchange plays. Those were the highest performing investments. You do have an era now of people wanting to financial services based upon using Bitcoin as collateral. So Max mentioned the Michael Saylor industry, or era rather, that people don't want to sell their Bitcoin. No one wants to be Bitcoin pizza guy. We've all been Bitcoin pizza guy. I've given away more Bitcoins than I like to remember in my time, and you soon start to learn that borrowing dollars or borrowing stable coins rather than selling your Bitcoin, if managed correctly, is the more sensible strategy. If you can manage it as your wealth grows. And also receiving yield is the financial markets are built upon debt. I do want to make a distinction here, because we are moving from a fiat debt-based money to, I believe my forecast is that we move into a non-debt-based central bank digital currency era. So I believe that all fiat currencies are moving to central bank digital currencies in the future, which to me is communism on a blockchain. But in order to combat that, we need many financial services built upon digital hard sound money. Now, the difference with Bitcoin financial services is, rather than borrowing based upon your credit rating, you have to first generate wealth. So you stack your sats, you generate wealth over time, and it encourages savings, because every time you spend it, you get punished. And then once you do that, you want to take a percentage of it, maybe put it at risk, receive a bit of yield, but you also want to borrow. Might want to borrow against it, and play a kind of a speculative attack, as it were, where on fiat currency and central bank digital currencies. So these are the types of companies. There's lots of different financial services that would be built around that. You can do really interesting, plays around now when. Debt capital markets are being built around Bitcoin bonds. You could borrow at a certain yield, and then you could invest at another yield and get a carry in between. So the markets are just getting really, really sophisticated as more and more institutions enter the market.
Well, once again, Michael Saylor is kind of leading the way, right? He just did a deal with what's the name of the bank? Silvergate.
Silvergate,
yep. And so he put up some Bitcoin and borrowed $200 million to buy more Bitcoin. And I was talking to some folks at the conference. I believe he paid 5.25% for that, which is Aladdin is a service. I think that they are. It's a 7.9% is the interest that they're charging folks to borrow against their Bitcoin. I talked to Adam as well at the conference, and I looked into Aladdin. It looks pretty good. But as you say, you can get rug pulled on the volatility without having a longer term instrument. So that would be helpful. But clearly, it's not. You have this pristine asset, so if you can borrow against it, then you don't get the tax liability, and for a lot of us, our cost basis, is in the single digits. So clearly, if you're selling it and you get 40,000, that's quite a tax hit. So that's welcome, very welcome, So yeah, these platforms are coming around. I would imagine that the institutions and the banks that make their money making loans principally are going to get more involved in this core business that they're in. They're in this core business as more banks become custodians, and that's a fairly recent development, right? Mellon Bank in New York is now a custodian for Bitcoin, and banks have become official custodians of their Bitcoin. So all the infrastructure of the banking is coming to Bitcoin. It allows for them to offer traditional types of products, and there will be competition amongst these banks, and so interest could come down, should come down, and the power is shifting from the fiat money world to the Bitcoin world, and the Bitcoiners are starting to have a lot of political clout in Washington.